Hey guys, it is Julie here with TipRanks, and today we're taking a look at two tech titans that billionaire Ken Griffin has been betting big on. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we are chatting about Ken Griffin, who is the founder of Citadel, and two tech giants that they have been loading up on lately. So we're going to take a look at these big companies, what they've been up to lately, and of course how Wall Street weighs in on the stocks. Don't forget to head over to the TipRanks website and check out our newsletter center, where you'll find both the Smart Investor and Dividend Investor newsletter, which will send you unique investing insights right to your inbox every single week. Links will be in the description down below. Now let's jump into these two tech stocks being scooped up by Ken Griffin. First on our list today is a fairly well-known tech company that is none other than Microsoft. Their stock trades under the ticker MSFT, currently priced at $327 per share. Their stock has seen growth of 39% in the past year, including growth of 20% in the last 6 months, cooling off ever so slightly down 1% in the last 3. Microsoft is one of the best-known names in computing and software, and over the years they've had their hand in virtually every aspect of home and business computer industry. The tech behemoth currently boasts a market cap of $2.44 trillion and realized nearly $212 billion in total revenue for fiscal 2023. Last year, they invested $13 billion into OpenAI, and that firm released ChatGPT, sparking off the AI rally. Microsoft is using ChatGPT as the AI behind the Bing search engine, and by adding natural language capabilities to Bing, they are making an effort to challenge Google for market share in the search arena. Microsoft is also using AI in additional products, including their Edge web browser and their Office products, and the company's Azure Business Cloud infrastructure platform is incorporating the new technology. Microsoft reported their Q4 earnings results on July 25th, where they came out with an earnings beat. They reported earnings per share of $2.69, coming in 14 cents ahead of expectations. On the revenue side, they reported a top line of $56.2 billion, which grew 8% year over year and beat the forecast by $710 million. The company's intelligent cloud segment accounted for $24 billion of their revenue total, which was up 15%. Their CEO commented that they remain focused on leading the new AI platform shift, helping customers use the Microsoft Cloud to get the most value out of their digital spend and driving operating leverage. In the second quarter, Ken Griffin increased his holdings of Microsoft by over 2 million shares, boosting his portfolio's holdings by 150%. His total investment in the company is $1.1 billion plus. There is also an analyst at Tigris that is bullish on the Microsoft stock and says that they are at the forefront of the AI revolution. Driven by its continued integration of increasing AI functionality, incorporating ChatGPT across all aspects of its business and products lines, which will drive the acceleration of the digital global transformation and highlights their investment opportunities. Microsoft will lead the AI revolution, driving change across every facet of enterprise IT and computing processes, driven by the increasing need for operating efficiency, a technology-driven competitive edge, and increasing productivity and creativity. Of course, Microsoft has no shortage of Wall Street attention. Their stock does come in as a strong buy with 34 current ratings. That breaks down to 30 buys, 3 holds, and 1 sell, with an average price target of $392. That would be an upside potential of nearly 20%. Down below, we can see a lot of ratings coming in just in this past week, most of them all north of 20% upside, beside one's hold here with an upside of 5.4%. And the second tech titan that Ken Griffin has been scooping up is Amazon. Their stock trades under the ticker AMZN, currently priced about $138 per share. Now, they did cool off a bit here at the end of 2022, but have been growing ever since. Over the past year, they're up 17%, but have grown 37% in the last 6 months, including nearly 11% in the last 3 months. Another very recognizable name, Amazon is a global leader in e-commerce. They have grown to become the 4th largest firm in public markets with a market cap of $1.44 trillion. In 2022, their online retail operations generated about $690 billion in gross merchandise volume. Amazon combines practical online tech experience with enormously deep pockets and have been developing new products to take full advantage of the emerging generative AI. These AI-powered additions to the product line include a chatbot, an image building platform, and a software code development platform. Their cloud service software, AWS, also makes extensive use of AI and is already generating $22 billion in annual revenue. Amazon came out with a pretty notable earnings beat at the start of August. For their second quarter, they reported earnings per share of 65 cents, which was 30 cents ahead of analysts' anticipated 35 cents per share, and a big change from the prior year's loss of 20 cents per share. They reported revenue of $134.4 billion, which was about 11% growth year over year and $3 billion more than anticipated. Amazon's CEO said that it was another strong quarter of progress for Amazon. They continued lowering their cost to serve in their fulfillment network while also providing Prime customers with the fastest delivery speeds ever recorded. Their AWS growth stabilized as customers started shifting from cost optimization to new workload deployment, and AWS has continued to add to its meaningful leadership position in the cloud with a slew of generative AI releases. During the second quarter, Ken Griffin scooped up over 3.6 million shares of Amazon, increasing their holding by 258%. Their Amazon exposure now sits at over $702 million. An analyst from Rosenblatt Securities also weighs in on the Amazon stock. They noted that their past concerns that the consensus views were too optimistic have abated as the business resets with efficiency and new focus for retail and AI an emerging driver in cloud. The risk of impending economic headwinds looks less worrying, opening the door to higher multiple consumer growth stories. And no big surprise that the Amazon stock is getting plenty of attention from Wall Street. They have 40 current analyst ratings, coming in with a strong buy with an impressive 39 buys in just one hold. Their average price target comes in at $175 per share, which would be a growth potential of 27% for this next year. And down below, we have a handful of ratings coming in this past month, ranging from an upside of 8% all the way up to 44% upside. Last month goes even higher, some as high as 66% upside, and some low-end price targets around 1%. So there are two tech titans that are being scooped up by Ken Griffin's Citadel. Now, I know these two companies are not brand new to you, but it is exciting to hear some of the optimism surrounding their AI future growth. Let me know your thoughts in the comments down below, and if you agree with those Wall Street analysts or not. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those analysts are looking at and providing some insight and entertainment. Please make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.